Welcome back to the podcast. My name is Tom Dool. I am the managing broker with the Fenton Group. Today, I have the pleasure of sitting down with our owner and CEO, Chris Fenton. We're tackling a big question that is on a lot of people's minds today. Is buying a home still a smart investment in 2025? With raising interest rates, inflation, and market fluctuation, many potential buyers are feeling uncertain. So let's dive in and get some expert advice from Chris. Welcome, Chris.
Thank you. Should we just say yes and end the podcast?
Yes, and no, we got to carry on. I want to kind of talk about what's happening in today's market. So, Chris, let's start by setting the stage. What are the biggest trends that we're seeing right now in the real estate market?
Well, it's an interesting time to be alive, isn't it?
Definitely is.
Interesting time to be alive. We've been through a lot. We went through a pandemic recovery, and then now we're going through, we went through a bit of a real estate correction,
Yeah.
and now we're going through a trade war. So
Yeah.
it's like, where are things sitting right now? We're seeing the market started out really strong in January. We were seeing a lot of activity online in conversations and actual purchases. And then it slowed right down around the time that this trade war kicked off. And now spring has come and we're seeing it get busy again. So
Yeah.
it's interesting.
Yeah, and not just with the trade wars either. It's also with the political instability of Canada. With Parliament shutting down and everything like that. That's really kind of caused people to kind of, there's many people are saying interest rates have been a really hot topic lately. Can you break down how rising rates are impacting both the sellers and the buyers currently?
But yeah, the rates rose, and that is the thing that slowed down this market as it was, I guess, designed to do. So up until the rates started to drop later half of last year, I mean, you know as well as I do, we were seeing people just sort of sitting on the fence going, well, it's going to be cheaper to buy houses. And then sellers were thinking, look, when it's cheaper to buy houses, people will pay more for my house. So everybody was sort of sitting on the fence. And now we have mortgage rates that are quite reasonable. 5-year is under 4% if you go to the right place. And that's historically, that's a pretty good interest mortgage rate. So I think that's the thing that's spurring activity. We just saw another rate cut. There seems to be a misunderstanding of the public when I talk to people that they think that these rate cuts are going to have these immediate and drastic reactions.
Yeah.
But I mean, you tell me on the last 3 drops, have we seen any, next week, did we see any giant increase in activity?
Yeah, no, I don't think so. And that's one of those things where people are always like, what's the future? Is it going to go back up? Is it going to keep going down? So, I think that right now people just need to look at where they're at today and make that decision based on where they're at today, not where they're going to be in the future necessarily, right? Like worrying about them rising or coming down, if you need to buy now, worry about what's today's rates are, and try to get the best for you.
Right, because if we were good at predicting the financial future of any market, be it be the real estate market or the stock market or the mortgage market or the bond market, we wouldn't need to work because we would just be rich off investments,
Absolutely.
right? So it's
Absolutely.
predicting the future is not easily done.
Yeah, exactly. And people need to buy now, right? And so those are the people that are, are coming out, and people are on the fence. I think that, is it going to get any better? We don't know. So, just do what is good for you at that time, right?
Yeah, I think that's the key.
Yeah, exactly. So we're seeing inflation affecting everything from, going out buying groceries to getting gas. We're noticing it big time in everybody's pocket. How is it influencing the prices on homes and the affordability, do you think?
Well, that's the question, isn't it? And when inflation's going up, they're going to be increasing interest rates to curb inflation. Increased interest rates doesn't directly, it affects the variable mortgages. It doesn't affect the fixed mortgages directly. But when inflation slows down or gets under control, that's when they start bringing down the interest rates as they are now. So the question is, we've kind of gone through that cycle now. We went way up and then we went down, and now we seem to be creeping up again, or we're hearing rumors that we might be creeping up again. But at the same time, they're bringing the Bank of Canada rate down, or they certainly did last time. So how's it affecting things? It's just affecting affordability. It's affecting people's budget, their household budget, what they can actually put towards a mortgage payment, and then it's affecting the mortgage payment itself. So it is definitely one of the bigger contributors to what's going on right now.
And people who are on fixed rates, if they're getting locked in at lower rates, they're feeling stability and, they know what their costs are going to be. And people who are not on fixed rates, as it's going down, they're finding that they have more money in their pocket at the end of the day because they're paying less money, right?
There's an age-old debate.
Yeah, absolutely. So looking at the long-term investments in real estate, there's always talk that whether real estate is a good investment, with historical trends showing us about real estate appreciation over time.
Yeah, find me a better investment over the long term. I mean, the S&P 500 has been going up 10%, on average over the last however many decades. Well, real estate's done a lot better than that, I think. So if you find any graph on long-term value of a home, there are down cycles, but generally speaking, it's going up, 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 up. And in the last 5 years, as everybody knows, it's gone up a lot.
And like because we're on Vancouver Island, I remember looking at the prices of the last 50 years in Vancouver Island, and it's just always been a steady climb up. There might have been a little, dead zone for a year or so, but it's always slowly going up. There's never really been a down in it, right? So,
Well, think about it. Think about the rise of reverse mortgages. We're seeing these reverse mortgages as inflation is causing things to get more expensive and our population is aging. People are getting reverse mortgages when they take a mortgage out on their house to get cash flow to live on, right? And why are people doing that? Well, it's because their best savings device that they've had over the period of their life has been
in
their home.
exactly. All that.
Yeah, I mean, do you want to rent and pay somebody else's mortgage, or do you want to, build your own
Yeah,
equity?
exactly. So many people are saying real estate is a hedge against inflation. Can you explain what that means and why that is?
Yeah, well, what does a hedge against inflation mean? Well, inflation, of course, is when the cost of a basket of goods or the cost of goods is going up. And a hedge is when you have an investment that's going up at the same amount or more, right? So if you're sitting on cash, if you say you had $100,000 in cash and inflation's going up, in that time period, your $100,000 cash is getting less buying power. So you're actually becoming poorer just by sitting on that cash.
Yes.
Real estate is a great hedge against inflation because as inflation goes up, it's generally going up. We do see declines in the market, but in the long term, as we said, it just keeps going.
Yeah, absolutely. And we've kind of already mentioned this briefly here, and weighing in on renting versus buying. What is the long-term financial impact of home ownership?
Yeah, one of the things I love about real estate as an investment is it's easy to leverage, right? So when you buy a house, you're buying it often with very little of your own money and a whole bunch of the bank's money. So say you buy a $400,000 house and you put down $100,000 and you're using $300,000 of the bank's money to purchase that house. Now, if that house doubles in value and it's now worth 800,000, which we've seen happen, you have a $400,000 profit off of a $100,000 investment, as opposed to the $400,000 investment because you didn't put down that 400,000. That's leverage, and that's why real estate is one of the greatest, most accessible investments for people. So if you're renting, you're helping somebody else build that equity. And if you're buying, you're building it for yourself. And the only mistake people make is sometimes buying a house that they can't afford, or they're just maxing out just where they can get away with the payments, and they're overextending themselves, and then life happens and they get themselves in trouble. So the only time I would think renting is a really best idea is if you just need that freedom to be able to travel or something like that, if it's a lifestyle decision, or you just can't quite afford it, and then it might not make sense because you're putting yourself at risk.
And I think that's why we see a lot of people who are looking for suites and that extra income, so it helps offset that, right? Where they can rent it out and help them offset their mortgage payments and their lifestyle.
Yeah, well, isn't that the biggest trend right now, right?
biggest
Like
trend.
you asked me about trends, I should have thought of that one because it's become more expensive to buy a house. It's become more expensive to borrow money to buy a house. So suites have been a natural response to
And
that.
multi-generations, right? We're looking at where parents are looking to buy a home where their children and their families can grow up all together because of the cost, right? So they're trying to take some of their equity that they have built to help their family's wealth, basically, and combining a home or a property that has multiple homes on it. So we're seeing a lot of that right now as well, right? Helping people get into the market that way.
A lot of people talking about, what are we going to do with my mom and dad in 10 years, or what are we going to do if, heaven forbid one of them passes away, So that's a big trend in real estate.
Yeah, and I mean, you said not even just aging parents. It's I'm finding parents who are like in my age group who are worrying about their kids. Like my kids are in their 20s, and like we're providing a home for them because we know that between rentals and whatnot. So as a family, we're providing a house for them to stay at.
Yeah, I have a client that just sold their house, their longtime house, and they're buying a duplex so they can move in with their kids for that exact reason, right? You're absolutely right. I agree with that. Seeing that all over the
Yeah,
place.
I get that from all the inquiries I get from all across BC from the stuff that I do. That's one of the that I'm seeing a lot where people are looking to do multi-generation families and on the same property. So a lot of buying right now are on the sidelines. We've kind of already discussed this, but to get further kind of into it, thinking about the sidelines of buying right now, right? Is it a good time to buy right now? Thinking about home price dropping. What's your take on that?
Yeah, it's an interesting question. It's fear-based, right? So markets are affected by fear, as naturally they should be, and they are. So people are worried. What's the fear? The fear is that what if I buy a house and it loses value by next year, right? So they're sitting there waiting. It's funny because people often don't flip that fear around and say, what if I don't buy a house and it goes up next year?
Yes.
Right? It's funny how fear works. It works the one way, not necessarily the other way.
Yeah. Yeah, and I've been talking to a lot of clients who did buy like last year or the year before. They were on the fence, right? Like, "Oh, it's a good time to buy." They kind of needed to buy. Now they're glad because they know that looking at their neighbors' homes and other homes similar, that they actually did better, right? Although it didn't seem like a good time, but in the long run has proven out to be was a good idea. And
Yeah. But what if the house falls in value and
yeah,
they're paying rent the whole time? So they're also losing money in rent and they're losing money in mortgage payments paid off in a whole bunch of
mhm,
ways. But it is a tough one because what if the market takes a steep
yeah.
decline? There's always that possibility.
Exactly. It's like it always asks the question, is there ever a perfect time to buy, right? Or is it more about personal readiness? I think that's what people need to look at. Not is it a perfect time to buy, but are they ready to buy? And do they need to buy, right? I think that's more important than is this a great time, right?
Yeah, it's about getting past that fear. All good decisions should be made in the absence of fear. So, you want to make a good business decision, think about it clearly. The only way to look at it clearly is to look at your personal situation. I think I said from the very beginning of this podcast, if you can predict the market, let me know because I could use your
Yeah,
help.
we're talking a little bit about the instability with the government and stuff like that. So, what roles do the government policies and housing supplies play in shaping the affordability of houses today? I know it's a tough question. Without getting political,
So it's a
it's a
loaded
loaded
question.
question.
They do have a fairly significant impact. I mean, we're talking about this trend towards multifamily. Well, in BC, they've changed the zoning across the
Yeah.
province so that you can now build multiple units on what used to be a single family lot.
Yes.
So, I mean, in theory, should increase housing. We haven't seen it here in any
Yeah.
significant way yet, but so there's that. There's first time home buyer programs that certainly helps changing the amortization periods so that people can have longer amortization periods on their mortgage, which means that they can afford
Lower
they can
payment.
have smaller
Yep.
payments on the same type of house.
Yeah.
Lots and lots of ways. The reason I laugh is because in my experience, and I've been selling real estate since
Yeah.
2003, in my experience, the government's often late to the party
It's
and their policies are too little, too late.
Yeah, we noticed that a lot, especially coming out of COVID. They're trying to put a lot of things in, and it's like, it's over. We don't need that, but I think that they're trying to make people happy. When people have that perception that they were wrong during the COVID extreme buying frenzy when things were going for way above asking, and so they put that rescission period in. And also the Airbnb. Having that ban on Airbnb in residential properties and in major cities and stuff like that, right? Opening them back up, those suites back up to the rental pool to offer housing to people.
It seem like they're pandering to voters to try to buy votes before an election. So, but either way, it's, they say the gears of bureaucracy move extremely slowly. So that's the other part of this is they have good intentions, but by the time the law gets out, can get through that whole process, the situation has changed.
Absolutely. So making a smart move for 2025, for buyers who are hesitant, what are some of the strategies that you can use to navigate today's market successfully?
Get a good real estate agent, get a good real estate advisor, find somebody that really is looking after your best interest and is in the market every day, all day long, and knows a deal when they can see it. Because what happens in a market like this, like we're in a buyer's market, we're in what we would call a buyer's market. There's more supply than there is demand. Less people wanting to buy than want to
Yeah.
sell. So what that means is there's a lot of listings on the market that just aren't selling and aren't going to sell. So you have to figure out what's a great deal.
Mhm.
Like there's still really good buys out there. If you price a house properly and you put it on the market today, it'll be sold in a week.
Absolutely. Days.
If
I'm
you
seeing
if
that days, right?
days, right?
Yeah. Or sometimes we're not even
But
can't
if
even
it's
get it on
10,
tour or get an open house done before offers are in on it. I've noticed a lot.
but if it's 10,000 overpriced, then what
It sits
happens?
there. 'Cause
Yeah. So you need an agent. You need an agent that knows, but you also need an agent that's going to take the time to educate you so that you know a deal when you see
and
one. And that's probably
yeah.
the most important
And
of
as a
all.
seller, there's so much competition. Like you said, there's more people wanting to sell than there is buying right now. So if you're not willing to give a good price, you're going to be kind of left behind, right?
Yeah, I mean, and the flip side is for sellers, the market is where the
Yeah.
market is, and you want to price yourself accurately. You don't need to give your house away
No,
to have it
no, no,
sell. You just
definitely.
need to price it
Yeah,
accurately.
exactly. Just getting it accurately. So, first-time home buyers, what advice would you give them who are trying to get into the market right now?
Biggest advice for first-time home buyers is really think through your personal situation. Talk to a mortgage professional.
Yeah.
Think through what you can afford, and if you got a great job or you just got a raise, like think about what would happen if one of you lost your job or somebody got sick, or like make sure you're not overextending yourself. That's the number one thing. You want to become a homeowner for sure, because like I said, that's going to be one of your paths towards financial freedom. But make sure you do it smartly. So make sure you understand your finances and just don't go into it with blatant optimism that everything will always be
Yeah.
okay, because I'm
Exactly.
in my 40s, you are too, and we can both tell you
I'm
that
in my
things
50s.
don't always go the way you want to. 50s. Sorry.
It's okay. I look young. Yeah, anyway, you want, right? You don't want to necessarily be house poor, so you want to make sure that you can afford your
Yeah.
lifestyle. You're looking forward to owning a home, doing travels, do you have kids getting ready for college? Have you thought about, that and everything, right? It's definitely getting all your ducks in a row. So to end this thing, this last thing I want to ask, is how can buyers protect themselves against rising rates? Should they consider lock rates or different mortgage structures?
Maybe can help predict the future, although nobody can. Traditionally, over a very long period of time, variable rates have outperformed fixed
Yes.
rates. A lot of people choose fixed because they know what they're in
Yep.
for. So it really depends on who you are, what your risk tolerance is.
Hmm.
You can take a bigger risk by going variable, but then save a bunch of money, or you can know your payment every month and potentially pay more.
Hmm.
So that's the biggest thing is to really talk to somebody that can help you work through your personal tolerance and your personal place.
Yeah, absolutely. I totally agree with all that. Anyways, I would like to thank you again, Chris, for joining us and for everybody next time.